Welcome to This Explainer. Today, we're diving straight into what is arguably the most massive shakeup in UK property law we've seen in over 30 years, the Renters' Rights Act 2025. You're probably wondering, what does this actually mean for your property portfolio? Well, in short, the entire market is drastically shifting away from short-term flexibility toward long-term tenant security. So let's jump right in and figure out exactly how to protect your cash flow and mitigate these new risks. So 25%. Let that staggeringly high number sink in for a second. That's the percentage of landlords who might actually leave the sector entirely because of these incoming changes. Almost half of those landlords are citing the loss of specific eviction rights as their main reason for bailing out. The stakes here are incredibly high, especially for those smaller single-property landlords who are feeling totally exposed right now.
Here's our roadmap for today's explainer. Number 1, the 2026 rental landscape. Number 2, evictions and tenancy rules. Number 3, rent controls and compliance. And finally, number 4, winners, losers, and strategy.
Okay, let's get into Section 1, the 2026 rental landscape, or as it's better known, the shift to long-term durability. The clock is ticking really loudly on this one. For property planning purposes, this new system is essentially happening tomorrow. Right on May 1st, 2026, the Act comes into full force, meaning all tenancies automatically convert. Then by May 31st, you're facing a really strict deadline to give your existing tenants a mandatory information sheet. And later that same year, the National Landlord Database and Decent Homes Enforcement rollout. Basically, the grace period is officially over. Moving right along to Section 2, evictions and tenancy rules. This is really all about losing the easy button. So the notorious Section 21? Yeah, it's completely gone. In the past, this no-fault eviction was your ultimate flexibility tool. It allowed you to regain possession simply by giving notice. But going forward, you have to rely on strengthened Section 8 grounds and actually prove specific statutory reasons in a court of law just to remove a tenant. Honestly, you need to get ready for more disputes, definitely higher legal costs, and potentially much longer void periods. And here's the kicker. Even if you have a totally legitimate reason to evict, like wanting to sell the property or move in yourself, there is massive new friction. You're literally locked in. You cannot use these grounds during the first 12 months of a tenancy. And when you finally do trigger it, you're hit with a mandatory 4-month notice period. Even evicting for rent arrears has been severely tightened, giving tenants way more leeway to pay before a judge will even step in. Next up, we really need to talk about periodic tenancies. You know, that traditional 6 to 12-month fixed-term contract we're all used to? Well, it's completely obsolete from day one. Every single tenancy automatically becomes an open-ended, rolling monthly agreement now. Think about it. Under the old fixed-term system, you had predictable turnover, right? Guaranteed income. Now, the tenant pretty much holds all the cards. They can exit at any time with just 2 months' notice, while you're locked in indefinitely, without a specific legal ground to evict. Aside from purpose-built student accommodation, standard residential landlords have to completely remodel their cash flow expectations for much longer, unpredictable holds. All right, let's jump into Section 3, rent controls and compliance, focusing on the mechanics of income and operations. There is this massive tension building up in the market right now. Rent increases are now strictly limited to just once a year, and they absolutely must reflect local market rent. That means no more arbitrary hikes just to cover your own rising costs. With mortgage rates and new compliance expenses climbing, you're facing a really serious yield compression risk if your operational costs outpace your strictly regulated income adjustments.
The government is aggressively targeting what they call backdoor evictions, which is raising rent to impossible levels just to force a tenant out. So you can safely say goodbye to bidding wars. You cannot accept a single penny above your advertised asking price. Advanced rent, heavily capped at just 1 month, which totally takes away your ability to mitigate risk by asking for, say, 6 months up front. And if a tenant dislikes your annual rent increase, they can drag you right to a first-tier tribunal, who can outright block it. Because, hey, there's nothing quite like a nice bit of mandatory bureaucratic paperwork to really spice up your day as an investor, right? Operating a rental property is basically becoming a highly regulated profession. Every single investor must follow 3 new operational steps. First, you have to meet the Decent Home Standard. Properties with hazards like damp or mold will face heavy fines under a WOBS law. Second, you must legally register your entire portfolio on a new national database. And third, you have to join a new landlord ombudsman scheme to resolve tenant disputes. Professional compliance is no longer just optional, it's literally the price of entry. Let's wrap things up with Section 4, Winners, Losers, and Strategy. We're looking at how to actually navigate this paradigm shift.
So, who actually survives all of this? Well, the likely losers are your highly leveraged investors, your low-margin HMOs, and those accidental landlords who rely on fast evictions to stay afloat. But surprisingly enough, some large portfolio landlords are actually backing this act. Why? Because the incoming landscape strongly rewards well-capitalized professional managers by actively clearing out their low-quality competitors.
So let's look at your actionable strategy shift. Number 1, tenant selection. Because you can't just easily end tenancies anymore, rigorous upfront referencing is absolutely critical. I mean, you are essentially getting married to your tenant on day 1. Number 2, property condition. You need to budget immediately for preventative maintenance because ignoring a tiny leak is now a massive legal liability. And number 3, your exit strategy. Planning to sell? You now have to factor in that 12-month protected period and the super strict 4-month notice window.
Ultimately, as this quote perfectly captures, the renters' rights reforms don't kill property investment, but they absolutely put an end to speculative, low-compliance strategies. Property investing in the UK is fundamentally shifting away from short-term control and rapid flexibility and moving directly toward long-term income stability and professional service. I'm going to leave you with this one key question to really mull over as you review your portfolio. Is your business built for short-term control or long-term durability? Because by May 2026, the market is only going to reward the latter. It's time to update your cash flow models, get your compliance absolutely locked in, and prepare for the shift. Thanks so much for joining me for this explainer, and hey, happy investing.